Welcome to Esperanza Podcast, a complimentary service that gives business owners a platform to share their journey and inspire others. Esperanza is brought to you by Hope for Founders, offering CEO, chair and one-on-one coaching, and proudly supported by our sponsors Stolen & Co, specialists in sales training and networking events, and Maria Bex, delivering studio quality podcast production. Today's guest is Simba Chilimanzi, a certified financial advisor with over 16 years experience in wealth management. He's a founder of Henwood Advisory, where he partners with senior executives, professionals and business owners to help them to achieve financial clarity and long-term confidence. Simba's commitment goes beyond finance. He is a passionate advocate for the community, having served on advisory boards for African Professionals Australia, and his voice is featured on platforms like Freedom Fire Podcast. In this episode, we explore the story behind Simba's success, the values that guide his work, and his mission to empower others through knowledge and leadership. Welcome, Simba. How are you today?
Thank you, Stephen. Really good. Excited about our conversation today. And can't wait to share a lot and also hear from you.
Excellent. So what we're going to do is tell Simba's story. So what I thought we'd start with is tell us a bit about your purpose. And when I say purpose, it'd be good to understand, does your purpose need to relate to your work? And also, would your purpose change where you currently are in your life versus maybe when you were a child? And does it continue to be the same purpose throughout life?
Yeah. Start off with a difficult question straight off the bat.
Yeah.
I think the whole issue around purpose is a complicated question because there's purpose, there's career, then there's values. So purpose is normally what are you doing at a particular time. So as at this moment in time, we're catching up over a podcast, and the podcast that we're catching up over is around work and my business.
Yep.
So there's a purpose within that business. Then there's a purpose around my family. Then there's a purpose around my impact in community. So what's my purpose? My purpose as at this moment in time is to talk to you about my journey as a business owner, and also to talk to you about my life stage up to now. Then, of course, there's my interaction with community and society. So I think your purpose, to come back to your core question, which is what's my purpose? My purpose for my work is to elevate people and improve their financial situation. And make sure that we do that in alignment with their values, keeping them accountable, but also helping direct their path. So as a former accountant, as a former stockbroker, I know a lot about tax law, tax structuring. I also understand the day-to-day demands around cash flow and budgeting. I also understand the daily reality of what it's like living in Australia. So my purpose for a client and a prospective client is to help them with their finances, which is also either aligned sometimes or is different to my purpose within my household.
Makes total sense, and I think that's very good clarification. You talked about values. Now, for a lot of people, values is on the website. You see, it sounds good, it feels good, but how do you what do you think about values, and how would you go about assessing your values? Just, I guess, maybe good to comment on not just what you see in Australia, but your background as well, and maybe you could clarify a bit of your story as well, and how you have come to your current values and what you think is important in deciding values.
Ironically, the longer I've been on planet Earth and the longer I've been in society, I actually think values are universal. And the values are universal in the sense that we all care about our individual outcomes. So am I getting fed at the end of the day? Do I have friends and family that love me? And am I making an impact? But also, is my well-being and welfare being taken care of?
Yes.
So if you assume that my preposition is right, then what really matters about values is caring for other people and you knowing that you're cared for. So at the end of the day, you might have a shiny website that says, okay, we do cash flow management, we do wealth management, we do estate planning, we do tax structuring. But if you're sitting in front of an advisor and you don't feel like that advisor is resonating with you, and you also don't feel like they're connecting with you, then I think there's a mismatch. So the value that is important is feeling that you're at the center of the service provision that is being given to you, which then now goes back to the core of what are values. And I think values are more about Are you being understood at an individual level? And if you're being understood at an individual level, then what is presented to you as a solution is then customized and custom made for you, as opposed to something that is just a cookie cutter or a generic. So I think values in that sense need alignment with what is core to the client.
Absolutely. Let's take a step back.
Yeah.
So obviously you've been an accountant, you've been a stockbroker, you're now financial advice. But let's sort of talk about childhood, and you're obviously also an entrepreneur.
Yes.
So that's a difference from working in corporate versus running your own business.
Yes.
And I think there is some huge differences, and people that run their own business will understand this. Do you feel like you're always been an entrepreneur at heart? And tell us a bit about your childhood.
Yes.
Maybe what's in a moment that made you smile that you can remember?
Yes.
And were there any entrepreneurial activities back then as well?
Yeah. So it all comes back full circle, because one thing that's clearly there but is probably not as well articulated is the name Henwood Advisory.
Right.
So Henwood itself is the childhood street that I grew up on.
Wow.
Right? I grew up on Henwood Avenue.
Yes.
So the way that I actually read Henwood Advisory is to read it as Henwood Avenue, right?
Yeah.
And what happened on Henwood Avenue? Henwood Avenue is where I grew up. I grew up with mom and dad. Mom was a banker at the central bank.
Yes.
So mom is a banker at the central bank. Dad was an entrepreneur. So what I saw daily was finance and money being managed, Institute of Bankers, seeing P&Ls, and also watching the Business Channel. But also seeing dad as an entrepreneur day to day, having to pivot, look at opportunities. Here's an opportunity. But then also seeing mom was a social butterfly, making new friends, assisting people, having assistance from other people. And when I looked at the intersection of that, that's what has made me and how we've built Henwood Advisory. So Henwood Advisory is more of a reflection of where I've been and where I'm going in terms of everybody's got a financial need. Everybody's got a dream. And then what's the intersection of the two? How do you help people get to their financial goals? Most people want to retire at a certain age with a certain level of income. How do we do that? Even before we talk about retirement, when you're starting out, how do you actually start out your finances? Do you understand what's coming in, what's going out? How is that structured? So going back to my childhood on Henwood Avenue was hearing the parents talk about finance, right? And sometimes they'd agree, a lot of times they'll disagree. And I'm like, okay, is there a better system and is there a better structure to stop those disagreements? And I found that you don't stop the disagreements, you actually encourage the disagreements. And in encouraging the disagreements, you get to speak through the issues. Once you speak through the issues, then we come to the essence of where's the alignment. And as soon as we've got alignment, then we can make progress, which ironically is actually an analogy to the structure that we have with clients when we're having client meetings. So back to your original question as to what are the childhood memories? The childhood memories are hearing the finance conversations either in the car, on the kitchen table, or in the general household. And all of those created questions with me, and hence why I took up accounting to understand 101 finance. They say the language of business is actually accounting. Then after I'd understood accounting, I found out that I didn't understand anything about investments. Hence why I went into stockbroking. And when I went into stockbroking, I learned more about investments. But now I knew about investments, I knew about accounting. But then how do I apply it to myself? Then I took the journey of financial planning, both for myself and more importantly, and equally as important, for clients. So that's the journey thus far.
You talked about an interesting concept. I find in Australia we struggle with having difficult conversations. Often there is a personality who'll try and avoid the conversation, and it creates sometimes a bit of a passive-aggressive response to that, or, and it comes out in other avenues, or it comes out in the wrong way. And emotional intelligence is a big topic at the moment. But what you're saying is having those conversations is actually the key to actually progression as well.
Absolutely.
How do you sort of go about facilitating that with your clients?
Yes.
And does it help being the third person there, or what it seems to be working? And has there been any sort of horror stories with that? Or I mean, I know sort of having worked in advice as well, and that's
Yes.
obviously how we met.
Yeah.
Sometimes people come to me as a last resort.
Mm-hmm.
Yeah,
Yes.
the marriage is it could be finances actually affecting the marriage.
Yes.
And whilst there is the professional corporate side of that,
Yes.
you're dealing with people.
Yes.
Yeah.
Yes. Yeah.
So talk to me a bit about sort of how you encourage that conversation, because it is valuable.
Yes.
And how you maybe do it in best practice as well.
Yeah. I might just point out, you say that in Australia you find that those conversations are difficult to have. I actually think that's a universal human trait. It's not just in Australia.
Yeah.
So it goes without saying that difficult things most people avoid, right? Whether be it difficult exercise, difficult dieting, whether be it difficult budgeting, whether be it difficult conversations, or difficult disagreements. We all have a tendency to avoid that. But one thing that is clearly evident is that, let's say you're having difficulties with exercise. Once you start targeting, I think if you look at most habits, they say rather than you think about exercise, just think about having your shoes next to your bed.
Yes.
If you've got your shoes next to your bed, chances are you're not going to skip over the shoes. You might skip over them a couple of days, but then at some day you're going to be tired about skipping over the shoes. You jump into the shoes and you start going for a daily walk, right? That compounds over the long term to you enjoying your walk, to you long term losing weight, which goes back to this issue about avoiding something. And then if you do continue to avoid it, you get the consequences of it, and it's normally a negative consequence. But if you then approach it, you normally get the upside. The only problem is that you don't get the upside immediately.
Yes.
So there's a book out there called Crucial Conversations, and you're like, okay, Crucial Conversations, what is that about? Crucial conversation is a disagreement between you and I. If you and I have a disagreement, if we don't address the issue, chances are we're going to move farther apart.
Yes.
But if we approach the disagreement, you'll find there's going to be the immediate pain, which is going to be navigating the issue. Right? And you and I have many times that we've disagreed. You think a certain way, I think a certain way. And when we've had the patience with each other to explore where you're coming from and where I'm coming from, we normally find that once we've worked through the stress of, hey, how do we actually work through this? We then come to a solution. So I tend to find, even when it comes back to clients where it's really core, it's what's your goal? And I'm speaking to the wife. What's your goal? I'm speaking to the husband. And because you were raised in a different household to your wife, of course your goals are going to be different, right? And your goals being different, I've asked you a question, I've asked the other a question. At times it actually meant that if one is more domineering than the other, I actually allow the one that is less domineering to speak first.
Yes.
Because then that creates bandwidth for them to have their voice heard, and they might not be able to have that, back to my Henwood Avenue conversations, they might not be able to win that conversation in the car. They might not be able to win that conversation on the table. But it's not about winning the conversation, it's about them being heard. And as soon as they feel they're heard, then now we've got two goals. And those two goals could be the same. And that's nirvana, we all want that. But many times they're actually different. Then when they're different, we then come to, can we have an agreement on where is the intersection, I guess, where they agree to something, and they might not agree with the goal as being the same. Maybe I will propose a goal where I see, because I'm a third party, and as a third party I can say, oh, you're looking at it this way, you're looking at it that way, have you considered this as an option? And sometimes they actually turn back and they go like, oh, well, we hadn't thought about that. Why? Because back to that tension, I don't have the tension because I'm only a third party.
Yes.
And so that's normally how I would structure a conversation in terms of getting the best out of it. And you would find that for lots of clients, that's one of the biggest values. value add that they're getting from speaking with an advisor, because it's helping them get perspective, which has got nothing to do with the tension that's within the household.
Yeah. You touched on two interesting points to me around the shoes, leaving out for exercise. Had you heard another psychologist do something similar? And I enjoy my exercise,
Yes.
but he talked about when you come home, get into your exercise gear straight away.
Yes.
So don't give yourself a chance to actually get into the track pants and set up at the TV. And even for me, that helps. So definitely that sort of setting yourself up for success, but also the different dynamics between, and it's changing, but traditionally it's been more the male has been the breadwinner and then the female has run the home. But you ask the male about what are their goals, what does the household look like, what do you need to achieve? The female knows all that information, and the male is really just going to work and knows about the money. But as we know with financial advice, it's such a personal thing, and it's about helping people to achieve their life more efficiently and achieve their goals. But for the male, sometimes articulate the goals is very difficult. Whereas the female can just tell you exactly what those things are. So it's beyond even just being heard, which is very important in this. It's also about allowing you to have all the information as well to actually, because this is, you can have all the tools in the toolbox, but you're trying to work out which are the right tools that someone needs. And sometimes the female is often filling in that gap a lot better than the male. So it's quite interesting. So that's the financial advice side. Now, you obviously worked in corporate and you've now run your own business. And what would you say to someone that is looking to start their own business and or has started their own business and gone that journey? What do you sort of see are the key things that allows, beyond what resort services you provide, allows a business to be successful?
I mean, that's a very difficult question for me to answer, because I'm still very much at the startup phase. Like I'm 6 months in, so I'm still learning a lot. And one of the things that I'm learning is that whatever your projections are, reality is always different. Where most of the times things are slower to start than what you anticipate. Processes and systems, because 9 out of 10 times you're building those from scratch. You also find that it's going to be longer. And the other key thing that I find is very different from corporate is the amount of iteration that you need to do. So a system and a process that was working last week might not work this week. And you need flexibility to be able to be changing on the fly. You also need flexibility to be looking at where the market is going. So are the opportunities that you saw maybe 6 months ago the same as they are now? Based off your improving skill set, you also basically need what they call a static mindset or growth mindset. You very much need a growth mindset, which can sometimes be different again from a corporate environment where you've got a specific job description, and the specific job description normally works to your strengths. And now as a self-employed person, you probably have got a larger job description, some of which works to your weaknesses. I think when you and I have spoken about business before, the traditional way to do it was, okay, for the areas that I'm weak in, I'm going to spend quite a lot of time improving that. But now as systems, processes, AI, services like software as a service now improve, you can now outsource all those weaker areas so that you can work on your strengths. But in working on your strengths, you now work on the drivers that drive the 80% of your outcome. So one thing that I've definitely found as part of this journey is capacity to grow and capacity to continue to optimize. So you get a new input, that new input feeds into the system, and you need a pivot. Sometimes you stay the course because what you're doing is working. And I think it's very much an iterative issue. And the reality is that the market and the environment is moving so fast that if you're not iterating anyway, you can't keep up, let alone grow. So I find it's very much an iterative process and optimizing for a growth mindset.
So a couple of things. Obviously you need to be agile. So you need to change. You need to sometimes understand maybe why you need to change. Gives you some clues of the right direction to go. But you talked about projections.
Yes.
That's a common word for, say, someone like myself and yourself.
Yes.
But the pre-planning to
Yes.
start a business,
Yes.
it's not just about registering a business name and working out your business card logo.
Yes.
Projections, and what you're referring to there, correct me if I'm wrong, is what is it going to cost me for the next 3 years? What are the likely revenue sources I'm going to have? What are the expenses I need to do?
Yes.
And when is this actually going to make profit?
Yes.
But also, what you raised was it's always changes.
Yes.
So something that I've been taught is having a contingency cost.
Yes.
So that could be 10%, could be 15%.
Yes.
Reality is it's probably even more than that.
Yes.
It's always different. You don't know what you don't know.
Yes.
So I think they're all sort of key things, and love to hear your sort of thoughts on how you went about that. But yeah, look, the last part that you've sort of also highlighted is knowing what you're good at and being comfortable to ask for help and use others that have a skill set. You know, we've talked about lead gen.
Yes.
There's entire teams that can go do that stuff.
Yes.
In a perfect world, waking up and having those leads, they're at your fingertips. So you can just focus on actually meeting those clients and illustrating value.
Yeah.
Awareness. People need to know about your business.
Yes.
It's, you can have a great business that no one knows about. So having some teams to do that. But maybe talk to me a bit about how you've used others and also how you went about the projections and how someone should go about that, because that's something I think a lot of people don't do. They fail to plan, and you're planning to fail.
You're planning to fail.
Yeah.
Yeah. And that's always a tricky one, right? Because the key issue you always have is how much runway do you have? Then based off the runway that you've got, what's the flexibility that you've got? What is the backup plan, and what's the backup plan to the backup plan?
Yes.
Because the reality of business is that everything is always changing. Then it's also then mindset. Do you have an abundance mentality or a scarcity mentality? If you've got an abundance mentality, chances are you're always iterating to get more. If you have a scarcity mentality, then chances are you're holding on to the little that you've got and expecting that to multiply. But we know that in the latter scenario, it's not going to happen. So in the process of planning, I've sat down and I've done projections, and those projections, some weeks I'm hitting them, some weeks I'm not. Some months I'm on target, some months I'm not. And it's just an issue of figuring out, okay, how can I generate more stuff? In lead generation, sometimes it's through my clients, sometimes it's through business partners. At the moment, we're looking at ways of marketing. And one of the ways that I've been marketing lately is through podcasts. Because through a podcast audience, I'm getting to speak to your client base or to your consumer base or to your followers. I don't know them personally, but now they get an opportunity to know me. This is the second podcast that I've done this year. So let's say you have a followership of 10 people. Those are 10 new people that I'm meeting. If it's 10,000, those are 10,000 new people that I'm meeting. I've even gone and I've created a corporate channel within my LinkedIn, and I've now got a followership, I think, from a cold start of 0 to 100, and we're building on at rate of about 50 to 100 on a monthly basis. So as I continue to build that audience, I continue to deliver value into the channel. So I've had some of my podcast clips which have been in relation to financial planning, because the podcast clips are sharing information that we use within client meetings. A new audience gets to listen in on some of the conversations and the thoughts that happen in a financial planning office. Because you know what a financial planner does, but the majority of people don't know what a financial planner does.
That's right.
So then if they don't know what a financial planner does, how are they going to walk through the door? So you need to have an audience or platform rather, where people are learning about you. At the moment, I'm working with accountants as partners. Those accountants are seeing clients who want to do tax returns or need to do their financials. When they sit down with them, because they understand their personal needs, they can say, hey, your superannuation needs attention, in which case they refer them across to me. Hey, you've got a trust here, there's a surplus, can that be invested? That comes over through to me. I've got a very close colleague that I'm working with at the moment who's an estate planning specialist, and I'm fortunate enough that he's got a financial planning background. And because he's got a financial planning background, he sees his estate planning business leads, and whenever they bring up, so they might be meeting for estate planning because they're getting older and they're preparing for retirement. And the most recent case that we've just had is that they asked him, hey, we're planning on retirement. Can you do a retirement plan for us? And he's gone, hey, I'm just an estate planning guy.
Yes.
But if you need to see somebody about retirement planning, go and see Simba.
Yes.
So now that's come back as an opportunity, which actually goes back to business and planning. A lot of times it's also not just inwardly looking to your business, but it's also about outwardly looking at other people's businesses. So how can you help other people's businesses? If you look at Business Networking International, which is called BNI, they've got a philosophy that give us grow. And by saying give us grow, they normally partner you up with 4, maybe 8 complementary business partners. So if you're a financial planner, you probably have got a mortgage broker in your network. You've got a conveyancer in your network. You've probably got a property developer or a business development manager, or maybe even a strata manager.
Yeah.
Within that network, you can now go as a planner. Hey, I've identified a mortgage broking opportunity. You give that mortgage broking opportunity to the mortgage broker. The mortgage broker is going to meet with their own lending clients.
Yeah.
Those lending clients probably need insurance reviews. Those insurance reviews can be referred back to you. So one thing I've found is that what's on paper as your projection is different to the reality, because the reality is that it's a moving target.
Yeah, that's right.
And so again, it goes back to that word that you used earlier, which was agile. You just have to be agile in terms of what you're doing.
Yeah, and it's an interesting one. When people go for advice, I think the stats are 90% of people ask friends and family.
Yes.
Maybe 20% will ask a professional
Yes.
about advice, and that's a huge gap. But what you're doing with working with an accountant, mortgage broker, is you're creating a trusted circle.
Yes.
And often when people do ask their friends and family, they'll say, who do you use?
Yes.
And that's kind of the same psychology around that. But the problem with just going to friends and family often is they want to help.
Yes.
But they don't necessarily have the skills and qualifications to help.
Yes.
And ironically, by offering help, they're actually making things worse for people sometimes.
Yes.
And so I think sort of having that trusted circle, and often it is through the accountant initially.
Yeah.
There's still perception of accountant level of trust,
Yeah.
but people need to do their tax.
Yes.
So then they start sort of going, okay, look, I also want to buy a place. Someone helps me with a mortgage. Now I've got a level of savings attached. What do I do with that?
Yes.
You mentioned a lot of people don't see advisors, and they a lot of people don't understand what they do.
Yes.
What is the challenge, I guess, sort of what I understand for a lot of business owners is they want to start their own business, and all the money they're making, they want to go back into the business.
Yes.
What we often do see, though, is get 5-10 years down that track, and they haven't contributed to super. They haven't got any savings.
Yes.
And they're putting everything into the business.
Yes.
And there's a term, compounding interest.
Yes.
So tell us a little bit about that,
Yeah.
and maybe sort of for someone that is saying, do I put this $10,000 into my business, or do I need to start putting a little bit into super?
Okay. Yes. Yeah. There's multiple ways to think about that, but because we're speaking to a business audience, business owner audience, I'll be a bit controversial. So traditionally, people say that you should diversify, which is what you're talking about. So, okay, whilst you're building a business, maybe you should be stashing away money. But there's quite a controversial topic that Warren Buffett brings up, where he says diversifying is for suckers, in the sense that if you're a specialist at what you do, then chances are you're making money at what you're good at doing. So if you're making money at what you're good at doing, it would make sense to me that you continue doubling down on what you're good at, right? So if you're a good builder, then make your money out of building, right? Because life is in phases. There's the education phase, then there's the accumulation phase, and then there's the retirement phase. So what does that then mean for a business owner? You almost will find without fail, if a business is in startup mode, like you're saying, it's making profits or it's making just cash flow, and that cash flow is being reinvested into the business. Because otherwise, if it's not reinvested into the business doesn't survive.
Yes.
So it needs to be reinvested into the business for it to survive. It's going to come to a point like you've given in your example. Let's say it's a 5-year or 10-year building period. But remember, the idea of a business is not just for it to generate income, it's also for it to actually build wealth. And how does it build wealth? By it growing in value in terms, there's valuation techniques that financial analysts use where they say it's a discounted cash flow. Discounted future cash flows, it's saying your business generates this much amount of money. If your business generates this much amount of money, that means also your business can be sold at a particular value.
Yes.
So you will find that when we're talking about business planning or financial planning for business owners, it's totally different to a PAYG structure.
Yeah.
And I think it's really, really important when you're looking at a business owner that you get a financial planner that understands a business owner. So when it comes to a business owner, you're different from a PAYG employee. The scenario that you're talking about in terms of regular superannuation contributions will make sense if you're making a regular wage.
Yes.
If you're a business owner, you don't make a regular wage, right? You've got times when you've got income surplus, you've got times when you've got income deficits. So then now we talk about, do you have a buffer? Yes or no? That buffer could be reflected via business insurances, personal insurances, and cash flow management. So again, you need to speak to a specialist, financial planner who understands business owners.
Yeah.
So back to your specific question. Your specific question is, how should you be managing your superannuation as a business owner? And as a business owner, there's what I call the small business tax concessions. And the small business tax concessions actually allow for that particular rule. So what the government has noticed is that most business owners do not put superannuation contributions as their business is growing.
Yeah.
So to make room for that, they've got what are called small business tax concessions. And small business tax concessions allow you to sell your growing asset, which is your business, because what has been happening is that you haven't been contributing to your super because you've been growing your business.
Yes.
And the reason why you're growing your business is because you are growing an asset. So if you think about the trade-off that you're doing as a business owner, is you're foregoing regular employment, you're building an income stream. This income stream can be sold at a multiple of that income stream. So now you've got an asset that you've built. If you've built that asset, then now what do you do from a retirement planning and a retirement strategy? It even applies for people that are employees but are very, very proficient at building assets. If you're building assets, chances are maybe you're looking at negative gearing. If you're building assets via negative gearing, it's most effective if it's done in your personal name and if it's done outside of super. If it's done in your personal name and outside of super, you're going to find you're in your 50s, you've now got a portfolio of maybe 15 properties.
Yeah.
Right? If you've got 15 properties that are in your personal name, at what point are you now going to retire? Because people don't know that within super, your tax rate is kept at 15%. In pension, your tax rate is nil.
Yes.
But all those assets are where? Outside of superannuation. So it then now means as a business owner or as an active investor, you need to be speaking to an advisor early enough in the piece, not when you're planning to retire. So back to the question, should business owners be making superannuation contributions at the same time? It's purely based off their business cash flows. So if your cash flows are good, yes, let's contribute into super. But if the cash flows are not, then let's not, but what do we have as a backup plan? The other thing that you find is that there's many things that a business owner can do. You'll find that maybe you're renting out a business premises.
Yeah.
And maybe rather than you rent out the business premises and pay that rent to somebody else, maybe you're better off paying yourself that rent. And how can you do that? You can actually own the business premises. So you're speaking to a planner about where should you be buying that business premises? How should that business premises be structured? Should it be bought in a trust? Should it be bought in a company? Should it be bought in your personal name? Or should it be in your super fund? So you can actually own a business premises within a self-managed supervision fund. So the key thing that's there is that, yes, the question could have been about super, but it's more also as a business owner, how should you be structuring your assets relative to your long-term goals?
So if just sort of paraphrase there, the fact that you are a business owner definitely helps because you understand the same level of problems because you're going through the same thing.
Yes.
you also got an accountancy background, so you
Yes.
understand that it's not about providing a tax efficient strategy like contributing to super.
Yes.
It's about how do we take what goal you want to achieve
Yes.
and do it the most efficiently.
Absolutely.
That could be just we invest in the business, but we grow that business and we get some tax efficiency by when we sell that business because we build an asset.
Yes.
It could be that you need to buy a place anyway.
Mm-hmm.
More efficient structure is actually to hold that place rather than your name or the company name.
Yes.
Is to actually hold in super.
Yes.
So having someone that can actually sit down and go, let's forget about the solution.
Yes.
Let's just talk about what you're trying to achieve.
Yes.
And I think that's sort of where sometimes it might be not as well understood.
Yes.
A lot of your conversations are not really about telling about what these answers are.
Yes.
The first meeting is often about, so let's just tell me what you're trying to achieve.
Absolutely.
Let's work through it and then go, okay, well, if that's what you want to achieve, let's not debate until you do something you don't want to do, or it may not even make sense. It might make sense because I'm limited, that I've only dealt with salaried employees, but someone that actually understands this actually it does make sense.
Mm-hmm.
It's just got to do it a little bit different way.
Absolutely.
And I think that's sort of the power of having someone that is got a taxation background, power of someone that's actually running their own business, but also the emotional connection of understanding that it's very hard to, and we've had this conversation, being a business owner, talking to someone that's in the comfortable salaried position about business concerns, because it is different. And that second you make that switch, you start to realise all those different things that you need to do.
Absolutely.
Making sales, bringing in revenue is suddenly a very important thing. And you talked about you track those. Sometimes you're on track, sometimes you're ahead, sometimes you're behind. But that's relevant for every business owner. You need to be having those conversations. Might be one every week. Let's have some reporting tools on how do you track that. And then there's a solution. Okay, well, I haven't got time to enter this in a spreadsheet. But there's now so many efficient things like, there's ones like HubSpot and Salesforce. A lot of these offer a free service up for 1 or 2 users. So if you're a one-man band, you can use that. And what that does is it allows you to track your phone calls, your reporting. How am I going this week? Boom, done. QuickBooks, Xero, all those offer all those solutions. But there's a lot of time in researching those different products, and now there's people around you to help you say, this is the best one for your current situation. I think that's the value of working with someone that is a business owner. They understand these and had these same problems, but you've got the understanding going, I'm better to focus on helping the client and having time to do work for the client and being there for them. But I've got teams around me in this trusted circle that's what they do all day. So they give you those solutions. So I think that's sort of that's where I encourage someone who's a business owner to sort of work with someone that understands that, because it's a different conversation.
Or the other thing that I've found, and you brought this earlier, is having accountability partners that also partner up with you. Some of the best businesses that I'm seeing at the moment work with either consultants or business coaches. A business coach, it basically is helping you, keep you on track, but more importantly is pointing out the issues where you've got blind sides, where you've got stuff that you're not noticing. And ironically, what I've found is that if you meet your financial advisor early enough, that a financial advisor can also serve as a business coach in tandem with a very good accountant, because there's accountants out there that just specialize on helping businesses grow. So if they're $3 million business turnover, are they going towards a $6 million turnover, or are they actually preparing for an exit, either an exit via private equity, venture capital, and there's places that actually specialize in that area. The point that I'm then making there is that if you do the process early, you might find your structuring works in line with your long-term goal. Because most of the times you're not just running a business to run a business, you're running a business for a long-term outcome. But is there an alignment between your long-term outcome and the structures that you've got? Because many a times I found people have sat with an accountant way too early in the structure. They've talked about business risk, they've talked about litigation risk, and they've set up all these trusts. And now they've got these trusts where the business is making a loss, that loss is trapped in that trust.
Yeah.
It cannot be distributed out.
Yes.
If you've got losses that cannot be distributed out, then what's the point of them? Because you cannot utilize them until you make a future profit.
Mm-hmm.
So if you're then now going to make a future profit, if the business doesn't last long enough, then now you've got this entity that you need to keep afloat.
Yeah.
It's got ongoing administration and accounting fees that continue going indefinitely. So maybe you shouldn't have set up the trust. Maybe we should have just operated as a sole proprietor.
Yeah, that's right.
So it's about thinking through, what are we doing now? What are we going to be doing in the future? And what are the long-term implications or repercussions of the behaviors that we've got now as a business owner?
Yeah, and look, that's a complex sort of discussion, because the accountant might be recommending something from a long-term point of view.
Yes.
There is a requirement for asset protection, and
Absolutely.
that's why they're going down in trust. But
Yeah.
what you're also saying is there is options to actually move to that structure at a later date.
Yes.
You can start off as a self-employed,
Yeah.
and there's things like rollover relief where you can do that. So it's a interesting conversation, because you go down that path. There might be some benefits in having a trust and things like that,
Yes.
but you're also going to continue to pay accountancy fees.
Yes.
Not to say the accountants are necessarily that's their motivation, but a bias that is definitely something they're probably not going to pay as much for a self-employed.
Yes.
But there's an option to go down that efficiently. But what you've also brought up is you can't change that once you've actually done an investment as well.
Absolutely.
So if you go, look, I've bought all these properties in my own name, maybe I was better to do it in super or a trust or something like that.
Yes.
You can't change it when it works to your favour.
Yes.
So often those discussions, you're busy just going, okay, how do I set up my ABN? How do I do my business cards? All those types of things.
Yes.
But sometimes determining the structure
Yes.
is such a massive decision.
Yes.
And it's got a huge impact. Everyone's getting in business not to be unsuccessful. They're getting in business to be
successful.
And I think having someone that's got a well-rounded understanding of those things, and also worked in different industries and also run their own business, they can say, yeah, look, the answer's all this. Because I've had people that are right recommend a family trust, but then you actually speak to another accountant and say, look, based on the current income, you may be better just having a company.
Yes.
And yes, it's paying 30%, but then you can pay it into this, and for different reasons depending on the level of profit.
Yes.
And also the fact of the ongoing servicing costs to do that.
Yes.
If it's costing you $3,000 and you're making a loss, is that really going to be that much better? Do you care about the asset protection? Depending on industry, maybe you do, but maybe you don't.
Yes.
If your chances of getting sued is unlikely, and you're just paying $3,000 costs plus everything else. You're just adding more and more cost to it.
Absolutely.
So I think that's where getting the right advice is so important, and doing it early.
Yes.
It's not a problem to pay for a consultation and get that right advice to confirm you're doing. Same with planning for a business. A lot of people don't want to do a business plan.
Yes.
And we talked about those projections. What are projections exactly? What sort of things are we talking about for someone, and how would they go about sort of doing some basic sort of projections before they start a business?
Projections, there's so many tools. You can find templates out there. Most good accountants actually will assist you with making those projections. But for the majority of people, you also are probably restricted in terms of the amount of money that you can spend. But chances are, if you're setting out into a business, hopefully you know a little bit about the business before you set out. If you know a little bit about the business before you set out, what you'd want is an understanding of what are your income drivers. So is it the number of people that you're seeing, and is there a conversion rate? So if people are walking into your cafe, is everybody going to be buying a coffee? If people are walking into your consulting firm, is everybody going to sign up as a client? If it's a one-to-one conversion, you now know what's your ticket size. If it's a coffee, maybe it's $5 a coffee. And if it's $5 a coffee, how many coffees are you going to be selling? But the other issue is you're selling coffees. Are you paying rent? What kind of a lease is it? Most leases are 5+5.
Yeah.
So before you even start, you've already committed yourself to a 5-year lease.
Yes.
If you've committed yourself to a 5-year lease, what does that then mean? Are you going to be manning that cafe yourself?
Yeah.
Are you going to be doing it with a staff member? In which case, probably you start off with a loss-making proposition.
Yeah.
And if you start off with a loss-making proposition, how much of a buffer do you have whilst you're making losses for you to start getting revenue? So when you start selling your coffees, how many sales are you getting? So maybe you do a coffee selling campaign before you open up your cafe.
Yes.
So maybe you're giving away vouchers with buy 10, get the next 2 free with a 10% deposit down. Or maybe you partner up with your local companies, whether they be small companies or big companies, where they can pre-order that coffee because there's something that's special about that. But maybe coffee is a commodity.
Yeah.
Maybe you want to create a specialist coffee, which goes back to what you're asking in terms of your projections. Your projections are purely built about of understanding what your actual business is.
Yep.
If you understand your business better, then now you can have better projections and they're more accurate. But ultimately, I think you would agree, as much as I would speak to any business owner that's worth their salt, projections 9 out of 10 times are just a piece of paper.
Yes.
They're good for a direction, but at the end of the day, they're nothing but a piece of paper, because they're still going to be tempered by reality on the ground. So those projections might surprise on the upside, they might surprise on the downside. They're very good as a guidance,
Yeah.
but the majority of times, like I started with the podcast, you still have to be agile.
Yeah.
So yes, you can have the most perfect projections, but if you can't execute against those projections, then you've got a problem. If you've got projections and your reality is different to the projections, then how do you work? So I think you and I basically agree on the concept that it's better to be doing things, iterating and improving, rather than having a perfect plan and a perfect strategy which you're not executing against.
We talked before about ikigai.
Yes.
So ikigai is a Japanese symbol, but as we also talked about, everyone, if you read enough books, these concepts sort of continually come up. And what it's sort of saying is, what are you passionate about? What do you love doing? What are you good at?
Yes.
What do people need?
Yes.
And what are people prepared to pay for?
Yes.
We just talk about that coffee sort of analysis. So some people might love and be passionate about coffee.
Yes.
Good at making coffee.
Yes.
People need coffee.
Yes.
But being good at running your own business versus being good at making coffee is often the challenge for a lot of business owners. And people are very technically strong at something. They might be working for a coffee shop. Yes. They might be working as an advisor, and they've got all those resources behind them. They've also got a name. Yes. What are some of the things that people may not understand about starting a business? Yes. And what are probably the key things they really need to focus on? Because you're spinning a lot of hats when you start a business. Yes. You can be building a whiz-bang website, but if people don't know who you are, I know you talked about awareness. If you're not getting sales, you're not expanding your network. Yes. What are some of the things that you're seeing? What are the key things? And maybe some of the things that someone could even be doing before they start the business?
I think in this day and age, as we have AI, as we have social media, as we have got a more integrated community, the biggest thing that you can ever invest in is your brand. Yes. And the brand is more about who knows you and who knows what you do and who knows how you do it. Yes. Because once you come to the opportunity, the question that I'm still going to have as a consumer is, how do I know you're good? So if you're good, what are your testimonials? Yes. Then if you've got testimonials, what are those testimonials about something that you're doing? So who knows about what you're doing? Yeah. Then also, who knows about you? Because there's somebody that is doing all those things. So the best thing that you can ever do is to have a brand. How many followers do you have on LinkedIn? How many followers do you have on whatever medium of choice that you use? Because you can grow your business through word of mouth, which is a very slow way of growing it. You can grow your business through platforms. What platform are you using? You can also grow your business through advertising and marketing. And probably the sweet spot is where all those would have an ikigai concept, where there's an intersection of all those three. So the best thing that you can do is to have a brand and be known by people. And once you've got a brand and you're known by people, then it's easier to scale. But for most people, again, similar to life and similar to planning, you can never have a perfect mix. So you can't necessarily have a strong brand before you build a business. So sometimes you might need to build the brand whilst you're building the business. And there's nothing stopping you doing that. So I guess the key issue that I'm pointing out there is you don't want to wait until you've got perfection before you start. So execute and iterate as you go. There's a very good book out there by Daniel Priestley, I think, called Key Person of Influence. He encourages you to write articles. He encourages you to publish. But in this day and age, does anybody have the time to read a book? Probably not. So you might find that majority of people have got time to see a 30-second TikTok clip. Probably somebody's got enough time to listen to a YouTube short, which could be 30 seconds to 3 minutes. So what are you doing out there to disseminate what you do, how you do it, and where you do it?
What's if we talk about a coffee shop to professional services and advice, what are some of the differences that you might want to consider, because it could be a very different audience? So how would you sort of go about assessing your audience and then building a campaign around that?
So I think this now ties back into your original question around projections. So it's also understanding what is the thing that you're selling, or rather what are you providing to the market. If you're providing a product is normally kept at the price point. If you're providing a service, there's normally a larger margin or a larger price point. So if you're providing a service, chances are there's a bigger margin and there's a bigger price point. If you're providing a product, chances are it's a smaller price point, but it's also a volume-based game. If that's the case, then you would find that your communication channels and your communication media will be different. I would intuitively say that if you're selling products, and let's go back to the coffee example that you just used, you're probably not going to be selling your coffees on LinkedIn. Right?
That's right.
But you're probably going to be selling your coffees on TikTok, because there's more people that are consuming TikTok than there are people that are consuming LinkedIn. Because you would like to think that people are using LinkedIn before work, at lunch, and at the end of the day, in a simplistic sense. Obviously, there's people using it throughout the day. But
and at night.
And they're not working. But in a simplistic sense, they're consuming it before work, during their lunch break, and at the end of the day. So you've only got 3 windows. But you'd like to think that it's TikTok. If it's TikTok and they're 30-second clips, they're consuming it all day. So that would now affect your distribution channel. And that's the way that I would be thinking about it. So I think what business owners provide are either products or services. That's not to say there are not products out there that are high ticket value. You could be selling yachts. That's a product. But maybe you're selling them at $30 million or 300 million, in which case you probably need a totally different platform.
Absolutely. Look, and I think it just comes down to knowing your client. But then how do you build an awareness campaign? Because people need, you can have a great product, as you say, or great service, but if no one knows about it, it's very hard to do that. And that's not necessarily to say it's a bad product or a bad service. It's just no one knows about it.
Absolutely.
But it's not just about letting everyone know about it. A lot more people will buy coffee. A lot less people will have professional services. And it's a different sort of proposition, because a coffee is $5. Advice is going to be more expensive than that. And there's more steps to that as well. You go to a coffee shop, if you don't like it, you don't go back. If you go and choose an advisor, someone you're actually sharing a lot with, and they're going to add a lot of value, there's going to be some more conversations around that.
Absolutely.
And you're going to need to know, well, look, how do I sort of find those people that are looking for that level of service? And I think that's sort of where there's a lot of thought in that process, where what people can often do is the shotgun approach. I'm just going to try everything. And just get it out everywhere. There's no sort of thought on it's just sell, sell, sell.
Yes.
This is me. That's what I sell.
Yeah.
But talk to me about sales.
Yes.
But is it sell, 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 or what is actually the experience that you might have of clients that go through? Are they attracted to the fact someone's selling, or is it something quite different?
Yeah. I would say it's probably a mix between the two. You need to be selling to create for you to make revenue and for you to have activity. But you also need to be qualitative around your sales. So what are you chasing? Let's keep it again with a simple example that we had between services and coffee. So because coffee is going to be a volume thing, I would say you need to be always selling.
Yes.
Services where before you even sell, you need trust. There's probably an education cycle, and that education cycle also builds trust.
Yeah.
So within that education cycle, you might want to know who is your target audience and how are you targeting them. But as your target audience, what's the value that you're actually giving them? The value that you're giving them, because we also mentioned that, for those services, there might be a cost to it. But you also have said in the same vein that if you build complexity, but that complexity doesn't meet your goal, that's still going to cost you.
Yes.
Because you've bought your assets in your personal name, but you now need to move them into a different structure. You're going to pay stamp duty between moving them. But how do you know that that's a problem? You can only know that that's a problem if somebody's brought that to your awareness. So how has that been brought up to your awareness? Through an education campaign, hopefully. And that education campaign could have been a sales thing from the business provider. So even though that person is being qualitative, maybe they should also be selling. So it brings me to the point that for a service provider, I think you would need to make sure that you've always got evergreen content. And evergreen content is content that is always current. So at the moment we're talking about text structures. Text law doesn't change significantly from decade to decade. So if you've got strategy and let's call it product from a service perspective that is evergreen, then it's always doing the selling for you. So it might mean that you also need a platform. So do you have evergreen content on LinkedIn? Do you have evergreen content on Facebook? Do you have evergreen content on your website? And that is doing the selling for you, right? But you now need scale, you now need a campaign. So who knows of you? There's search engine optimization, which is pointing traffic back to your website. But what content is there? Because for most people, you can't always be selling because you also need to service. So it's that balance.
So just to sort of clarify there, what you're saying is every business needs to sell.
Yes.
But at a professional services level, the delivery of that is not necessarily a sale. What it's doing is it's not telling you could lose money if you don't get a right tax structure or this. You're actually going on there and you might be offering a webinar or a free information session where someone will come in and actually get to hear you, and you'll talk about some of the things that someone needs to consider from a tax point of view. And it's an educational way of delivering that. But what that does is it illustrates value. So whilst you might be selling, you're actually the perception of the prospect is this person has given me value and they've educated me. I've gone away and I know more about that topic than I did before I walked in the door. So that also allows people to see you, and it develops a level of trust, but also develops a relationship as well. And ultimately, you can be great at what you do from a technical point of view. But if people don't understand the relationship, so people deal with people they like. And if they don't trust you, and the best way to trust is not sort of tell how great you are, illustrate it through educational and adding value. So there's a level of trust, and then people naturally want to have a conversation. I think that's where it's very different, and a lot of people get it wrong. A lot of people get out there and just do a lot of the talking. They'll tell how great they are, and they'll sell. Some of that sometimes works because, to your point, you still need to sell. But I think the people that we've seen in professional services industry, they may term it still sales, but I think the whole delivery and often the client's mind, they go, the reason why I went with Simba is because he didn't try and sell me.
Yes.
Yes, if you want it black and white, it might be still a sales, but that delivery in the client's mind, that's not a sale.
Yes.
They helped me.
Yeah.
Their focus was on listening, helping me, giving me valuable content.
Yes.
And I think that's very different. And I think that's something that a lot of businesses, even from a coffee shop point of view, why does someone come to a coffee shop versus every other one?
Mm-hmm.
One might have a bike rack. And these people, knowing their clients, they're all fitness people, and they're coming they're paying an extra money on a premium to get an organic coffee.
Yes.
Why are they doing that? Because they're also healthy, and then they're also riding, but they're all parking their bikes out on the street, getting stolen. You create a bike cafe that attracts those people, and who generally buys a bike? CEOs that spend $15,000 on a bike. So I think the more you understand the client and the more you appeal to them in adding value and education, the difference in that sell mentality changes a lot. Having said that, let's talk about a bit what you do sort of provide, because I think that's important, and maybe what would be, say, a next step if someone wants to have a conversation with you. How would they go about doing that, and what does maybe a first meeting look like? So, all right, Simba, so this is your website, Henwood Avenue, Henwood Advisory. Tell us a bit about the website. If someone's logging on for the first time, what are some of the key sort of things to the page, and next steps? Someone wants to organise a meeting with you.
Absolutely.
Does it cost anything? What's the situation there as well?
There's every bit of likelihood that by the time that we go to air, that this website might be updated, but let's speak to it as is. So the way I normally would approach all client meetings is I like to deliver value, and value for the client is what's the strategies that we're going to talk about. What am I going to learn that's new to me at the end of the meeting? And for us to get there, we need to have a lot of conversation. So maybe in the first meeting, because you don't know me and I don't know you, we've had a quick phone call. And that quick phone call is normally anything between a couple of minutes to maybe 15 minutes. In which case, I'm getting to understand my client's needs or my prospect's needs. So where is your business at? What's the stage that you're at? What are, more importantly, your needs? And how do those tie in with what we're trying to achieve? So let's call that a problem statement. Once we've understood what that problem statement is, we've agreed that there's scope for me to help, and to help significantly by adding value to your situation. In which case, we may do one of two things. Either I send you a packet of information, because some people always want to prepare so that they don't waste their hour. As a business owner, your time is money. And if your time is money, chances are you want to know that for that hour, you're going to get value. I would say roughly my first meeting should be about a charge of $500. But you don't know me from a bar of soap, and you haven't met me before. So I normally like to then return the favor that you're having the confidence of meeting with me. And in returning that favor, I waive that upfront fee. So I deliver roughly about $500 worth of value, because that's my hourly charge at $500 an hour. So in that first meeting, it's free. We talk about your needs, and at the end of that meeting, if you still continue to see value, then we continue the conversation. So what we're trying to do in that first meeting is to understand your business cash flow, your personal cash flow. Where are your goals? Are we on track? Are we not? Where do we need help? Where can we add better efficiencies? And we're talking about tech structuring. What entities do we have? How are those working for you? How can we utilize them better? We're also talking, especially if you're a business owner, because we're particularly talking about business owners. What's the level of insurances that you have? Are those working for you? But also, what are your fail safes? So are we even thinking about what is the next generational transfer? So do you actually intend to pass on your business to your children?
Yep.
Are your children going to be able to buy you out? Because remember, you also need to retire. If you're not going to pass it on, what is going to be your exit strategy around your business? So we actually talk about all of that. Then once we've discussed all of that, we now have what we call a goal. We've now got a timeline in terms of that goal, and we now engage in what is called a statement of advice.
Yes.
The statement of advice can take anywhere between a week and up to 4 weeks. We create that strategy, that statement of advice, which entails a strategy. Then based off the strategy that we've then laid out, we then say what's the long-term goal and how do we then achieve that. So we'll do that in a presentation meeting.
Yep.
The presentation meeting will be about an hour, maybe an hour and a half. Within that presentation meeting, we'll then come up with an implementation schedule. So what do we implement, how, and by when?
Yep.
For most people, that's an ongoing thing because your life changes, your business changes, and we normally would facilitate that by continually meeting at least once a year and also on an ongoing basis. So as your advisor, I'm available and accessible to you in an ongoing nature.
Yeah. So it's a very customized solution.
Absolutely.
Even 15-minute phone call. It's an opportunity just to see if you work well together.
Yes.
Confirm you can add value. Confirm
Yes.
that they obviously want to go down this process as far as time, because there is some time, but that sharing of information as well. So there's an efficiency with that time because you're offering them a ability to share some information. Might be they fill out a fact find,
Yes.
but they might be they've already got their financials which they're giving your accountant. That's going to give you a lot of an idea on those types of things. They can share some of that information.
Yes.
What that allows you to do is better prepare for that meet.
Yes.
So even though they're investing time, it's going to be a bit more structured around them.
Yes.
And really what you're doing is getting to the stage where I'm really clarifying your scenario, so I can be in a position to give you professional advice.
Absolutely.
Obviously, that's from there. That's sort of where the money sort of starts.
Yes.
But it gives that prospect a lot of opportunity to sort of go through, understand, go. Do they understand me? Can they add value?
Yes.
And by that time, I think they're in a good situation to sort of go, yeah, this is something I need, and I'm prepared to pay for it, and I'm going to invest the time. So I think that's sort of really good that you're doing phone call and getting some information about them, and then you're investing that time into that first meeting to understand them.
Yeah.
That's a lot different than just going and get one coffee and it could be right, could be wrong.
Yes.
Thank you for watching today's episode. If you'd like to get in contact with Simba, you can visit his website www.henwoodadvisory.com.au or email simba@henwoodadvisory.com.au. If you'd like to feature on Esperanza Podcast, contact Stephen on 0407 062 344 or message us through Instagram @Hope for Founders. Thank you and have a great day.